Hey guys, how you doing? So Dan from Trading with Dan here. So what a day on these markets. Just gonna have a quick chat about oil, because oil has basically broken the internet today, broken FinTwit, financial Twitter. But yes, here we have the futures contract in question on here on the CME. So this is the chart for it. So it had a low, what was its low? It had a low of negative $40, and it's currently trading. It's still trading. Obviously we won't be able to trade this through any broker unless you're like literally like an oil producer or like an oil storer or someone that basically deals with actual physical oil. But yeah, it's currently at negative 20 at the moment. So basically they're paying you if you want to take away 1,000 barrels of oil, because that's what these one contracts on here is 1,000 barrels of oil, which is a barrel of oil is 42 gallons. So 1,000 42s is 42,000. There you go. 42,000 gallons. So yeah, I don't know if you've got room in your swimming pool, whether you want a flammable swimming pool or not. Yeah, whether you've got do you know what I mean, space to stack the barrels up. You'd also have to buy those barrels as well. I mean, you get the oil and you have to, you know what I mean, come and take it. You don't just get given it in 1,000 individual nice little barrels. But anyway, I'll stop being silly now. But yeah, but what this does show me, and what this just showed the market, we've had a bit of a sell-off in the markets today, although nothing major, but we did turn around a bit on this. I say nothing major, we're still pretty high, but we did come down a bit. But what this is indicative of is the real world like economic situation, the real world demand at the moment for oil. The real, do you know what I mean? It shows actual what is going on better than obviously stock markets will show, bond prices will show, things like that. Even gold and silver prices, maybe with maybe not, with whatever suppression or whatever goes on there, whatever liquidity issues go on. This isn't getting propped up by the Fed. Do you know what I mean? This isn't getting bailed out. Oil isn't being bought up and put on the Fed's balance sheet. Oil is a real thing, and it's not these are financial products, but oil isn't a paper contract. Oil, this is a real thing. This is a real life market, and this is showing you what the state of the real world economy is. So this is probably going to spook the markets, because obviously this is the May contract, which obviously expires in May. Here's the June contract, and the June contract is trading currently at $21. This will be pretty much the traded contract, a combination between these. If you're trading on some sort of basic retail exchange, they'll combine these and sort of roll them through gradually. But either way, if you're going to be trading something, if you're going to be a futures hedger or whatever, an oil company, and it's like, well, the expiry is gonna basically collapse like this because this is the real demand. If you don't expect in another month's time there to be some real demand, the oil here is going to tank. So I think I did a video before about how oil could basically go negative, and basically it has gone negative. But I mean, actually the actual price on the combination of these months, if the outlook starts to look bad and storage starts to back up, the actual traded price would be negative on the whatever derivative you trade. Obviously you can't trade this so close to expiry, and this is why it's collapsed, because no one wants to actually take possession of it. But if the outlook does keep looking bad, you could end up with actual negative prices along the curve, which would be pretty insane. So yeah, just to put things in perspective, I mean, I think these super tankers, where traders are like, some traders are basically chartering out and storing oil at these prices. Well, they were actually doing it at these prices around 20s, thinking that was a great deal. So they were basically chartering these super tankers, and I believe they're about $300,000 a day. I'm not sure off the top of my head how much they store, but what they'll be doing is they'll be buying the short-term contract here, and then selling it straight out along the curve. And obviously basically what they're doing is they are Sorry, that's a complete rubbish. Ignore that. They're buying the oil, but then they're selling out along the curve at one of these prices out on the curve, say at $32, and then obviously the price was roughly 20, and then they are locking in $10 per barrel that they put in the tanker. Then obviously they're gonna have to pay for the tanker. But yeah, so these are some crazy trades going on here, guys. Some crazy stuff. But yeah, I mean, like I said, it's not overly crazy. This is just the state of the world right now. And looking at, if you look at this stock market, this is on a daily. Yeah, this is on a daily. Let's look at it on a weekly, just so we can get the very top where we were. Look, this is end of last year, December. This is obviously Iran. This is obviously that dude that they whacked. But yeah, so obviously after that, basically this is like when the markets were trading relatively normal, like as in stock markets, and then this is basically what happened. Obviously after the virus impact started to kick in. So, but what I'm trying to tell you guys, this would be the stock market. I mean, quite literally, this would be the stock market, as in negative, as in basically would have gone to zero, gone bust. These financial products are worth nothing. These companies, I mean, companies that don't make money are worth nothing. If you're buying them on the hope of future demand, you're taking a risk on like one day they will be profitable, but you're working in this current environment that we've got now, where actually it's very unlikely they'll be profitable, but they've got so much debt and they're losing so much money. Those companies do have a actual negative value now. These companies are beyond bust, and so there's actual companies in the stock market that should be basically below zero. So you will get paid to basically have those shares. It's ridiculous to think of, because obviously then, do you know what I mean? And if the share then goes down further, you then owe that extra money on the position because you bought them basically, and then obviously they then go back up, then obviously they go positive. But I mean, if someone gives you money to take on a share, and then you can probably just declare bankrupt. I mean, in reality it'd be a difficult thing to do. This is why companies don't trade at zero. But anyway, so yeah, so there we go, guys. Here's the actual oil curve, and this is the term structure for oil each month going out. This is I used to trade similar markets to this, but with interest rates. This would basically, if you plotted these on the chart, that's the yield, and there were interest rates, that would be the yield curve. But this is the oil futures term structure curve. But yeah, so yeah, interesting day. No doubt that has spooked the market, because like the market is in basically la la land. Do you know what I mean? It's basically riding around on magical unicorns, just basically with dollars getting thrown at it like it's like, do you know what I mean? Like it's like they're a stripper. But anyway, just crazy times, guys. Anyway, yeah. Bitcoin video coming up anyway, so I will speak to you guys on that. Yeah, and remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I'll speak to you guys.